SVC Media.
Welcome to the iGaming Daily Podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
Last Friday, Evoke plc reported on its first quarter of year-on-year growth since Q1 2022, marking the London Stock Exchange Gambling Group's first period of sustained growth since its $2 billion acquisition of William Hill. Management highlighted a 3% increase in corporate revenues, driven by double-digit growth in the core markets of Denmark, Italy and Spain. However, Evoke's performance was weighed down by clear disparities in the UK, as online casino growth was hampered by declines in sports betting results and continued retail declines. Led by Per Widerstorm, Evoke's new executive team remains confident in achieving the value creation plan target of mid-target growth between 5 to 8% in 2024. Yet, as autumn sets in, Evoke remains deeply exposed to UK headwinds, especially as the Chancellor evaluates UK gambling's tax plan, with potential changes that could wipe out any value creation achievements. iGaming Daily is brought to you by Optimove, the #1 CRM and marketing solutions for the iGaming sector. I'm Ted Menmuir, and joining me today is Joe Streeter, editor of CasinoBeats. Joe, how are you doing?
Yeah, I'm good, thank you, Ted. A good weekend, interesting weekend of sport, and back at it this morning, ready to go for another big week of gambling news. How are you? All good?
Good. And I like your positivity as we drill down on more kind of Q3 numbers and PLC performance. So, okay, let's hit it off. Take me through kind of Entain's Q3 performance, in which it states that it's posted quarter-on-quarter growth since 2022. So, do you feel this is a comeback?
Yeah, I was going to say my opening line to you, Ted, was, as a Man United fan, a diehard Man United fan, inherently, I love a comeback story, and this feels like the start, chapter 1 of a comeback story. It feels like it's rumbling there. And Widerström's tenure thus far, he's kind of overseen this transformation, and it feels like one of many transformations for Evoke, but he's overseen this transformation, and it feels like it's been strong. They're moving in the right direction. He will have toasted the turnaround of the business. As you mentioned, they achieved growth for the first time in a quarter since the lucrative acquisition of William Hill. And that acquisition, as again you mentioned, is one that's yet to pay off. Largely, their M&A strategy has been fruitful. They've pinpointed their markets they believe they can have success in, tapping into markets with, I think, a high barrier to entry, and looking to kind of build a strong foothold in these markets. So if we kind of go into the results, they generated group revenues of 417 million, up 3% on the 2023 comparative figures of 405 million. Importantly, this led to year-to-date Evoke revenue standing at 1.27 billion. And they kind of maintained expectations for a strong second half of 2024 to be in line with midterm targets of 5 to 9% of year-over-year growth. And there's a real focus on I think being impactful when it comes to player bonuses and CRM, and they're just generally seeking to evolve the way they engage players. And I do believe that has paid off. Obviously, they seem to have gone all in on sports, just looking to drive retention with a focus on what they're bringing to sports players in markets that really have a strong sportsbook base. And without getting into too many details, positivity for the group was largely fueled by success in their core markets, as you mentioned, namely Italy, Spain, Denmark and Romania, where it made up for, I think it did make up for UK headwinds, as much as they are kind of exposed in the UK market. Core markets represent 85% of the group's revenue, and they seem to be very much putting their eggs in that basket. Key here, though, is they're eyeing a return to year-on-year growth, and it will be seen as a glowing light for investors. And the firm's shares were up 4% as Widerström provided outlook on their results. What did you think, Ted? Obviously, I don't know if you're as kind of positive as me.
Okay, Joe, thanks for a very good thorough breakdown on, let's say, Evoke's progress for the time being. But let's kind of pick it apart here, because there's a lot of kind of disparities in what Evoke are presenting. and especially the clear one here is what's going down in the UK. So let's go through that. They saw 12% revenue gaming, increase in revenue gaming in the UK, but however, continues to be kind of offset by sports betting declines. And do we always have to, with Evoke, do we now have to kind of sideline any kind of retail recovery or any retail performance and saying, look, you can't kind of match that with the online performance because they're still recording a 9% decrease in the retail performance, and it has a direct impact. I think they pointed out a direct impact of 5 million on group NGR contribution. So, Joe, how do you kind of account for all that with the disparities in the UK? And what does it actually tell us about Evoke as a company and where it's trying to get to?
Yeah, it is concerning, right? And it is an elephant in the room for them as kind of we laud the success and we toast the success of their core markets away from the UK. The UK market and the consistent kind of burden, I guess, maybe the word, or drag of William Hill. It continues to be an elephant in the room, and that elephant is only going to get bigger as we kind of tout tax increases and a further drag on the UK market. But there is a real focus on improving the UK market for Evoke.
But let's talk about that elephant in the room, because it does carry a £2 billion price tag. It's been hanging over the neck of Evoke for a couple of years. What is their strategy for William Hill? I mean, how are they going to turn around, and especially its retail segment that just continues to bleed out?
Yeah, forgive me for, but you know, one of the ways they've kind of touted is just by a product uplift. They've just spoken quite a lot about a product uplift. I think new gaming machines in the first quarter of 2025, and I think just trying to boost footfall in the stores and just provide a better output, a better offering. I think there's been uplifts to the app. Obviously, we're not talking retail there, but I think they are focusing on an omni-channel experience when it comes to William Hill. And I do think it's worth as well looking across the sector. Last week, Rank reported their results, and they provided some positivity when it came to footfall for Mecca and for Grosvenor casinos. And I think maybe Evoke will be buoyed by that. There is, as much as the high street is failing and the high street is in turbulence, there is a sign there that there is a ray of light that footfall can happen, and there is an appetite for kind of soft gaming, and so they can benefit from these new gaming machines in the first quarter of next year.
Yeah, I think you raised up some good points. I mean, the other thing that came out of Q3s was just growth overall in the UK.
Yeah.
And I believe that the companies now, especially the PLCs, have kind of adjusted to I'd say 3 or 4 quarters of kind of regulatory alignment, especially on the online casino segment. So that will return back to growth. It's whether kind of the Evoke brands can supersede their competitors or get back to that level. I think that is kind of like the long-term commitment.
But one more thing on the UK, Ted, because it's really worth drawing attention to it, is we are at the mercy of the red briefcase of Rachel Reeves on the 30th of October, because that could very much strangle any value creation for Evoke, and not just Evoke, for other brands as well. I think that could be massive, right?
Absolutely, and I think we're going to get that later on. That is in my questions. But I want to kind of focus more on Evoke. It's what it's saying to markets, but also kind of a breakdown of its quarter performance. Now, the core markets, as you mentioned, Italy, Denmark, and Spain have all kind of registered double-digit growth, and you're now seeing its online gambling vertical is really kind of dictating where the company goes at 85% over NGR contribution. How do you think Evoke is kind of balancing UK kind of stagnation against core market growth in Europe?
Well, right now, if we're honest, there's not a lot of balance, really, is there? There's one is growing exponentially and one is really struggling. But for this set of results, the thriving in core markets kind of outweighed the stagnation, and they reported positive growth. They reported some good news for investors, and I think it's interesting to look at where they've got it right in those markets. I think the M&A strategy in the core markets away from the UK has really paid off. For example, in Romania with the winner.ro acquisition, it enabled them to establish a podium position, a market leading position in the country, a country that is not easy to enter. So they've got this footprint there with that brand, and they've become kind of steadfast. There's the competition there is, it's limited. So they've done well with that acquisition. And I think generally speaking, it's about nuances, understanding the nuances in each market, getting that right. We've seen in Italy, they've really taken a casino focused approach, and that's paid off. They've they've done well in that market through being casino focused. So that's interesting too. And I think it's just about taking a nuanced approach and continuing to shift the focus away from grey markets and into their core markets.
Yeah, well, I mean, they have been stung by that before, as we know, especially in the Middle East. I mean, to me, with Evoke, it always just comes back to, they've got a lot of kind of growth initiatives, but it always comes down to they've got that William Hill kind of burden hanging on their neck. And that is an area where I think the investors, the product teams, everyone wants to kind of see where has it moved on, coming up to 3 years past the acquisition. And that is still very much the kind of burden that hangs over how you evaluate Evoke's performance.
It's crazy to say that though, right? Because, you're talking about William Hill. I mean, it's such an established brand, such a strong brand as well in terms of branding, and such a big retail presence and online presence in the UK. But I think when you hear Widerstrom talk, he's talking about the investments in William Hill. They're constantly talking about how they're trying to evolve William Hill, how they're trying to bring the online William Hill offering into the new era, uplifts to the app and that type of thing. And then trying to uplift the retail presence, which is obviously massive, through an omni-channel experience. So, it's a real interesting one. I don't know, Ted, where do you see William Hill in kind of the next 2 years or even year? Do you have much faith?
I don't think it's a question of faith. I think it's a question of how much kind of time and investment's afforded to kind of correct past mistakes. And also, I think what's important to understand is what's very difficult for leadership is that they're making decisions at scale, but with a sharply turning kind of context of what's happening in key markets. So again, pointing back to kind of the core market growth. Yes, it's in Italy, Spain, and Denmark, but these are markets that are yet to kind of input the same kind of regulatory adjustments as you see in the UK, the Netherlands, Germany, or Spain. So Spain can be a market that takes a turn forward, and Denmark too. Yeah, I think Evoke, and also alongside kind of Kindred PLC, it has such a kind of high exposure to kind of where the markets will go, and I think that kind of I wouldn't say it kind of blurs the outlook for how to judge these companies long term. So I think, look, Evoke is doing well in hitting kind of its short and mid-term targets. However, if you look at kind of that value creation plan on a long-term format, it has still a long, long way to go.
And 100%. It's a long road ahead. I do think, though, this was a positive, I guess, first step, as much as it's kind of late in the day to be having a first step. The first report of growth for a long time. And I guess this was kind of a good first step.
So, okay, let's start to close out. And, we got Q4 coming up. How do you see kind of Evoke's landing for 2024? And do you think that its performance overall will please analysts and investors?
It's a tough one, right? It's a tough one. I think as long as they continue to deleverage and manage the debt, I do think investors will be happy. And I think retaining that shareholder faith, that investor faith, is absolutely crucial. I do want to kind of point out one other thing that we've kind of seen them do that I think will lead to positivity from investors is they've streamlined the marketing spend. We saw, I think, in the first half of the year, they spent sort of north of 30 million on marketing, and marketing to revenue, it just wasn't there. So we've kind of seen them streamline that. Moving away from the US as well, I think they're just streamlining and just focusing what they're doing. And I think that will only serve to please investors. I think investors will have faith in Per Wedderstrom. So, yeah, it's hard for me to tell exactly where the roadmap leads because there are so many moving parts. But I do think investors, will have a reason to be optimistic, but will also be very nervous, like you say, about that William Hill brand.
Do you think the investors look at Evoke after all it's been through, after 3 very kind of difficult years, and do they believe that this company is more stable and has better growth prospects?
I think it's tricky because a lot of it does hinge on the future of the UK market. What do you think?
I think you've hit it on the head. Okay, so this kind of drags me to my final question. So all eyes now are on the budget, aren't they? I mean,
yeah.
And I think, look, there's a level of exposure for every PLC out there, but how exposed is Evoke to an increase in UK gambling taxes and to an autumn tax hike?
Yeah, a worrying amount, because significantly, just because of that William Hill brand, the retail presence is strong, and as you say, like the growth in the other core markets, they can thrive, but it can continue to be diluted by the UK market if value creation is kind of strangled by the budget. And the briefcase on the 30th, fittingly a Halloween budget. I mean, it couldn't be the headlines out there. They're just there. They're just so on point. But I believe there's maybe reason to be listening to the DCMS. Lisa and Andy at the DCMS last week, listening to kind of the sentiment coming from the Labour government with regards to business. I do believe there's reason maybe not to be optimistic, but not to have as much trepidation as is currently being felt across the industry when it comes to the UK. I don't believe they will strangle the industry as much as is being reported. And I think aside from that, I think Evoke is continuing to kind of make investments in William Hill, continuing to invest in building that brand and evolving that offering, bringing that offering forward. And I do think it can grow. I really do. But obviously, we are at the whims of Rachel Reeves and Keir Starmer on the 30th of October, Ted.
Well, Joe, you've been great. And you've given me a great idea of dressing up as Rachel Reeves for Halloween, carrying a red briefcase and scare all gambling leadership there. So, okay, thanks a lot. This has been iGaming Daily, and I hope our audience has enjoyed that. Thank you.
What a sight to depart on that is. Thanks, Ted.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News network or check out the latest edition of the SBC Leaders magazine. Happy reading.